Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going out there? It's September 9th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So we finally saw a pullback in stocks. Mostly these crazy high-flying tech names that looked overvalued 2 months ago. I was wrong on. They just kept going higher and higher. So NASDAQ pulled back sharply. Again, it's Wednesday. We're getting a little bit of a bounce here. Maybe a little short covering. We'll see. But I just want to put some of these things in perspective for you. And you have Tesla down 30% plus. It was 500. Now it's 350. And I love the $5 billion offering they announced on September 1st, where the stock was at 500, like at its high, all-time high. Now it's 350, so 30% lower, just 9 days. I'm not sure if they closed that offering. I was trying to find out information of where they closed the offering on that price, but they said it should be done by today, but I'm curious to see the price that they were able to close this at. I haven't seen it yet. If you have it, you can send it to me, but I'll probably know by the end of the day. I just couldn't find it before this. I don't know if it was a shelf offering where they could sell $5 billion, over a certain amount of time or whatever, but I also read that they were looking to do it. I'll finish it by September 9th. But man, good time to raise money. Hopefully they raise a little bit of money at a much higher price. Overstock. Overstock was trading at $128 3 weeks ago. It's 65. So talk about a 50% retracement since August 20th. It's another company. Did a great job in their offering. Raised $177 million on August 11th at a price at $84.50. So $84.50, they got that offering done just 3 weeks ago. It's great for the company because the stock is under 70 now. Not good for investors, though. Those mostly institutional investors that came in. But again, great for the company. Raising money at a super high price. Moderna down from 98 6 weeks ago, and is 55. So you're looking at a 40% decline. I can't believe it. I'm telling people, I think 3 weeks ago, that it's a good short. I did a video on it, if you look at YouTube or Twitter, only because when the numbers came out on how much the government, who they're partnered with, is going to charge for the vaccine, if they're first to the market, whatever, it was something like $20, $25. Every company that covers these guys, they were modeling 120 or higher. Think about that. So all the evaluations saying, well, the stock should be worth, $100 or $95. It was all based on that vaccine, which is going to be 95 to 98% of all their sales. And we're talking about their modeling for the next 3 years. Holy cow. You got to see like the 10-year outlook and discounted cash flow models. They predicting, I'm not kidding you, like $100 billion in cash on the balance sheet 10 years from now. Crazy. Considering the company never brought anything to the market, FDA approved, whatever. But man, I'm surprised it didn't get hit harder because it's your only product, and you just got told you're going to sell it at a 70% discount than was originally thought. But not too many people load the numbers. It's normal for Wall Street, especially for biotech companies that are going to look to raise money, and the guys covering them get investment fees. Makes sense. Look at Apple, 137 to 115. You say, well, it's not that big in terms of percent loss. The amount of market cap Apple lost is $400 billion. We throw around billions and trillions like crazy, right? Let's put this in perspective. That $400 billion amount lost in 3 trading days, $400 billion, is more than the market caps of 492 of the 500 companies in the S&P 500. Think about that for a minute. So only 8 companies have a market cap in the S&P 500 that's larger than $400 billion. I'm going to give you those names, and I'm going to leave one out because I'm sure if I told you to guess what those 8 names are, you're going to see Apple, Google, Microsoft, Facebook. What do you have? Walmart. You have Berkshire. There's one on that list that surprised the hell out of me. It really did. I don't know why. Maybe you guys knew, and I'll give you a second. But it's Visa. I didn't know Visa was the 8th largest company in the U.S. based on market cap. Just surprised to see that. mean, not crazy, but I just didn't think, I don't know, for some reason. Anyway, if you look at 8 companies, only 8 have a market cap larger than $400 billion. That's how much market cap Apple lost in 3 days. Facebook went from 304 to 275. Again, not crazy percentage-wise, but it amounted to a $70 billion loss in market cap. NVIDIA losing nearly 100 points. Is it 589 to 490? I mean, insane moves. But when you look at everything on a whole, the NASDAQ, fell 10% in 3 trading days. As I mentioned, it was rebounding a little bit today. And that 10% number, it seems like a lot. It's enough to make investors nervous, or maybe it's just the media making you nervous, since the major financial channels, media channels, I mean, the guests, the host, the headlines you're seeing, I would scare the crap out of anyone. Breaking news in red everywhere, all over the screens. We're in a correction, which is the definition of a 10% decline in any stock, sector, whatever. Correction territory. Could we see this sell-off? And then you have, Kramer coming on and saying, you got to be an idiot not to take profits here. And, it's just so easy to make money. And, again, not making fun of him. He's kind of right. But just everyone, sell, right? We're in correction territory. They're bringing on all the technical analysts, and every technical analyst warned that more pain is coming. I didn't hear one say buy the dip. I didn't see not one. Of course, when tech rebounds like, another 5%, 99 of these guys are going to go on TV and tell you to buy the shit out of stock. You got to buy it. You got to buy it. But for now, more pain ahead. And it's a cool job being a technical analyst sometimes. Just wish you'd let us know things that happened beforehand, not tell us after the fact analysis. It's like falling down the stairs and breaking your arm, and the doctor's like, look, if you watch where you were going and held onto the banister, you could have avoided all this. Just meaningless. I love listening. This is why this happened. I don't care why it happened. Could you explain to me how I could have avoided? That's what you pay these people. That's what you pay me for. They try to warn you on things with COVID, when things are, when I'm worried about the markets, and that's our job, right? That's what you guys pay me for. My subscribers pay me for. You listen to this podcast. I'll tell you after the fact that everything happens. Man, anyone could do that. But putting the tech drop in perspective, okay? Because the 10 was scary. The NASDAQ was up 75% from its March lows and 32% year to date. And that was as of September 2nd before the pullback. When you look at the rest of the market outside of tech, you strip out FANG plus Microsoft, most of the market's not down that much. It's at around 3% over the past 3-4 trading days. That's based on the S&P 500, the equal weight index. Obviously, the bigger names, the bigger market caps, the FANG names and Microsoft carry a much bigger weighting. They equal 22% of the entire S&P 500 index, right? Responsible for that index just surging. But if you strip them out and give everyone the same rating, or the weight index, the S&P 500 is down on the year. Interesting. Now, there are tons of tailwinds that will continue to put a bid under this market. I have no bias here. I'm just, I'm going to share some of these ideas on my educational segment, but listen, it's important that you understand this. And economic data across the board in the U.S. has been trending higher or better. And in the meantime, the economists still remain bearish, which is a bullish sign because they have yet to upgrade their forecasts. They're late to the party. What you hate to see is what you saw with, high-flying growth companies. If you look at names that are just expected to grow enormously, but yet they miss those estimates, what happens? Look at Slack. You get crushed. It's the same thing when it comes to the economy and economic data. I mean, if it's conservative, you're going to say, well, they blew out expectations. It's all about expectations. That's what the market trades on. If you look at manufacturing, you look at consumer spending, retail numbers, unemployment. I don't know if you guys saw the 40% year-over-year increase in mortgages. 40%. I mean, that number is like single digit. That's a single digit number forever. 40% year-over-year increase. Incredible. Don't know, all the home stocks are going through the roof, and that trend is likely going to continue as long as we have low interest rates. Look at the Fed, monetary fiscal stimulus is going to continue. Trillions more coming. Interest rates will remain low for a considerable amount of time, years, and if they don't, they're going to implement yield curve control. They have to keep those rates low, so it's a win-win situation. I would say they're going to use yield curve control, and it's going to be great even for small cap stocks, especially most riskiest assets. It's giving you a long-term time frame that, hey, we're capping the rates at a certain level. But the only way it doesn't happen is rates stay low by themselves. But I think they will generally move higher, forcing the Fed's hands. If not, either way, it's a good scenario, which makes stocks a great investment. I think it's pretty reasonable also to expect inflation. Trillions just handed to people directly. We're not talking about TARP, where it was given to the banks. And consumers are getting these checks in the mail, businesses, everything. And I have to tell you, when it comes to inflation, everyone's scared of it, but equities are actually a very good investment at early stages and mid stages of inflation, which I expect to see. And I told you that in February and March, when all this stuff shit was hitting the fan. We're hearing a lot of people come out and say, yes, I expect inflation now. A lot easier to see. Look at valuations. Yeah, they're stretched, but take out the crazy tech names, maybe some nutty biotech, and look at some of the energy, industrials, financials, cyclicals, dividend-paying stocks, small caps are reasonably priced. A lot of names within those sectors or segments are well off their highs. Now, say the stat again. Remember, the major tech companies, FANG plus Microsoft, account for 22% of the S&P 500 index. And these names are what push the major indexes higher, especially since the coronavirus. But also that there's plenty of tech names outside of the high flyers. Plenty of them that are trading at below 20 times forward earnings and growing their earnings by more than 20%. You say, wait, 20 times forward earnings, Frank, that's expensive. It's expensive if you compare it to the S&P 500 over the past 10 years and say, well, it was trading at 16 and a half times. That's the normal PE ratio over the past 10 years, the average, the mean, whatever. Which is right, but we have a low interest rate environment, so maybe you push it up to like 17 and a half, whatever. But it's a company by company basis, guys. If you're trading at 30 times forward earnings, but your earnings are growing at 35, 40%, your stock is actually cheap. These are the names that exploded. And these names aren't like garbage names that are up 100% for the year. I look at the sales trends. I cover this in a video. Go check Twitter. It's for free at Frank Curzio or Curzio Research YouTube page. I did a video on it. Credit Suisse came out with a great report. You look at the margins. The margins have exploded compared to the rest of the group, to everybody else. So if you're looking at the names that took off, it's because they're seeing sales, earnings, margins explode. But when I did my own screen and looking at companies in tech that are trading below 20 times forward earnings and growing earnings by more than 20%, Qualcomm, VMware, Teradyne, Aspen Tech, Fortinet, Palo Alto, Micron, just a few of a ton. Decent-sized list. These are names I'm researching. Don't go out and buy those names. I'm going to look at individual basis. Maybe you see insiders buying. Maybe you see more. There's another 50 factors I'd have to go through to see which ones are the best, but that's a good starting point. Usually that starting point's a lot smaller for me when I'm screening names. Oh, here's about 12 names. I didn't think there'd be 50. Let's see which ones are the best and have the best catalyst going forward. Another reason you're looking at another tail, where else are you going to put your money? We all know we have tons of liquidity, and this money has to flow somewhere. Maybe it comes out of these large cap techs. If you're a multi-billion-dollar hedge fund, pension fund managing billions, trillions, even some of these get trillions, right? BlackRocks and Vanguards or whatever. Where are you going to put the money? And name another country that you would put this money rather than putting it in the U.S. And most still have under 25% capacity, which is, in terms of opening their economy. Even New York just announced, as I'm doing this, they're going to allow 25% indoor dining up to 25% capacity. Congratulations. You're only closed for 6 months. Nice job. You going to put in treasuries? 10-year at 0.6. Good luck. You going to buy gold? Yeah, they're buying gold, but most of these guys don't have more than a 5% allocation in gold. So where's they going to put the rest of the money? And then you look at COVID. Everywhere you look at the U.S., the numbers are getting better and better. And 2.89% death rate this week. That's the lowest thus far, people who get the coronavirus. It was 8% in April, just to show you that this number keeps coming down because we know we have to protect the right people. And we're smarter about this, but that's what we want to see. And hospitalization rates are at their lowest levels as well. With that said, all those positives, reasons why you should buy stocks, not all stocks, but why the bull market's going to continue, all of this can be derailed. All of it could be derailed. So we could see a massive, massive collapse in stocks and a huge slowdown in our economy. How can it be derailed? There is a huge agenda to make things seem much worse than they actually are when it comes to the coronavirus. It's important that you're aware of this. Most of you are, some of you are not. It's fine. I don't care what side you're on. It doesn't matter. This is about your portfolio. For example, if you have a social media account, I want you to do me a favor. Try reporting something positive about the coronavirus, like positive facts. The positive numbers that I just mentioned, 2.89% death rate, hospitalization rates, just those. Or the fact that out of all COVID deaths in the U.S., only 6% have been 100% caused by COVID. The other 94% had 2 to 3 other serious illnesses. An overwhelming majority of those people, much, much older age, 90% in nursing homes. Not saying that COVID isn't the cause of all these 180,000 plus deaths, but it's not the sole cause. 94% of these people that died was because they had 2 to 3 other underlying conditions, and they were much, much, much older. Fact. Maybe post a stat about how the recent data from CDC when it comes to the coronavirus and influenza, this is February 1st through August, if you're under 15 years old living in the U.S., you're 40 times more likely to die from the flu after catching it than dying from the coronavirus. It's 40 times more. And don't shoot the messenger here. Just reported the numbers on a CDC website, which is unbiased. I mean, used by Democrats and Republicans to cite data. If you have another site, let me know. That's unbiased. Again, this is data I'm trying to capture to tell everyone. But try posting positive data about COVID on social media. Just try. And watch how quickly you get attacked. Just look at my social media accounts. Just posting this data. Hey, this is great news. No, you don't understand. It's crazy. Why are you telling kids to go back to school for? You don't even have kids. No, I have kids. I have one that takes Humira, lowers her immune system, and I'm a little worried. But looking at statistics, I think she's going to be fine. I'm in the boat just like you. I'm not saying all parents should send their kids back. I'm saying it should be up to the parents, though, based on the statistics. It should be up to the politicians. And I understand why they want to attack you. I mean, scaring the shit out of everyone means more people are going to stay home. They're going to watch more of your news channels, and the people who own these networks and hosts are going to make an absolute fortune. So it's in their best interest to scare the shit out of you so you keep watching. Which is pretty crazy if you think about it, since they're truly hurting America and hurting Americans by not reporting the truth. Which, remember when that used to be the media's job? To tell the truth without an agenda? Not today. I mean, these are the numbers. This is the data. This is the science. I have no agenda here. If we see cases rise, that death rate goes up, you're gonna hear me talk about it and say, hey, we got to watch out, whatever. These are numbers. Someone's been following us for longer than most people out there since January. But this is the data, this is the science. Yet people with an agenda, I say like the idiots running New York and California, and I have nothing against New York, California people. I love those areas. They're really, really cool. Just hate the fact that you have people telling you what to do, what you need to do, which is crazy. But the people running a lot of places around the country, they don't want to hear it. They don't want to listen to science. And it's funny because every politician, they all say the same thing. They're going to follow the science. We're going to follow the science, do what the science tells us. What science are you talking about? Because I've seen assholes like Zeke Emanuel, who's the chair of the Department of Medical Ethics and Health Policy at University of Pennsylvania, oncologist, apparently, a big voice out there when it comes to COVID. He's encouraging lockdowns. He wants lockdowns. He's encouraging that we still have lockdowns. Now, that's his opinion. Everyone's entitled to one. And that's not why I think he's an asshole, even though he's a respected doctor and should be looking at all the data, which he's not. But I'm not ripping him because of his opinion. This guy's an asshole because he also has his own consulting firm that charges businesses and companies on how to reopen or get around the current red tape from governments that are keeping their economies closed. I mean, you got to love that guy. Gotta love that guy. He has an agenda, and he's going to make a fortune if the lockdowns continue. But he is part of science that someone could be listening to. And you have to remember, whatever side of the aisle you're on, these politicians, they don't give a shit about you. They don't give a shit about me. They only care about power and money. You don't know that by now? They're going to do anything and say anything to maintain this status. Trump just changed it on drilling off the west coast of Florida. Offshore drilling. He's for it. It's great. Now he changed because Florida's a big battleground state. You look at Biden. I never said defund the police. Wait a minute. I didn't say, yes, you did. I didn't say no fracking. Yes, you did. I said fracking, no federal. No, you didn't say. Well, they're changing because they're looking at polls that people care about, and they're going to change their opinion because they want to get elected. They want power. Instead of really sticking to what they believe, they're going to tell you whatever they want. You got to know that by now. They came back to Zeke, talking at both sides of his mouth. Nothing new. And you remember Al Gore, who's a brilliant person, extremely smart guy that told the greatest story ever about how our world is basically going to end if we don't address global warming immediately, right? That was 2006. He scared millions and millions of people. He forced government bodies and institutions to invest billions to help save the world. They had to invest or they would have been called out, right? Got to save the world, lower carbon emissions. He even got famous actors to join the cause, preach on his behalf. I mean, that's the definition of a cult. But listen to some of the things he said. Sea levels would surge by 20 feet. They're rising by 3 millimeters per year since his forecast. So based on his forecast, that 20-foot surge, it's not going to happen to 3017 that year, okay? He said polar bears are going to die. Polar bears, they're dead. They're not going to find ice. They're going to die. Polar bear numbers are actually increasing. They've been for years. The Arctic sea ice will be completely gone by 2014. It's not. The forecast keeps getting pushed out every year. 2025, now 2050. I think 2025 is going to get pushed out again. And I'm not against trying to make this world a cleaner place, a better place, or against climate change in general. I'm against someone intentionally making bullshit predictions that would never come true, something we actually see in the financial news industry all the time. But to scare the hell out of everyone, right? That's his intention, to go over the top. Why? Because Gore was buying carbon credits through a fund set up with the former chief of Goldman Sachs Asset Management, started their own fund, and they amassed a fortune trading carbon credits, which rose tremendously as he started promoting this movie and getting governments to mandate global warming policies. But Al Gore not becoming president was the best thing that ever happened to him. He was worth around $3 million back then. This is in 2000 when he lost to Bush. By 2013, he was worth $300 million. It's after publishing his documentary and Giving You Truth a few years earlier. Very smart politician. Scare the hell out of everyone to make an absolute fortune. You didn't have to scare him. You didn't have to make bullshit predictions. You can get your point across, and people on both sides of the aisle will believe you. But when you make stupid predictions like that because you want to scare the shit out of everyone so you make a fortune, that's politics. But getting back to the science part and who we listen to, guys, this is very important. Zeke Emanuel believes we need to lock down again. Again, he has his own agenda. We have a blueprint with Sweden showing, we don't need lockdowns to lower death rates and hospitalization rates. Look at states like Georgia and Florida, first to reopen. Numbers are going down across the board as they reopen at the end of April, early March. And you look around, businesses are not dying in these areas. People are living. Hospitalization death rates are low. Now that we know people under 60 without underlying conditions will have mild-like symptoms. We know that. Take Dr. Fauci, who I have no idea, again, about the science, who we're listening to. No idea why this guy was promoted to the world's leading voice of the coronavirus. who originally said the U.S. is fine. We're fine. We're perfect. Never going to need to lock down cities. Not like in China. No way. We'll never do that in the U.S. Today, Dr. Fauci, never shake hands again. Don't shake anyone's hand. Don't shake anyone's hand. While he's posing in pictures on the front page of magazines, instead of being in the field analyzing every piece of data available on the coronavirus, coming in from every state on an hourly basis. I have nothing against Fauci. I think he's a decent person. But he's been very, very, very wrong. There's no denying that. What about Dr. Theresa Tam? She's someone we're going to listen to? Canada's chief public health officer. You're going to listen to her on her interpretation of the science, who says that everyone should wear a mask when having sex with their partner. Everyone, wear a mask. Even if you're under 50, where coronavirus is like a mild flu for 98% of that demographic, wear a mask. I'm sure Dr. Tam is single. If she's not, I'm sure her husband's probably going to leave her if she really practices what she preaches. Because that's a joke. That's Canada's chief public health officer. Is telling everybody that. That's considered the science, the people. Why is that important? Because Joe Biden came out and said, he's leading the presidential race by most polls. Can't deny that. Definitely going to become our next president, saying he would close our entire economy if scientists recommended. What scientists, Joe? I need to know. Because everyone I just mentioned has an agenda. Are these the people that you're gonna listen to? It's a good question. Because what happens if he does listen to those scientists that I just mentioned? Imagine shutting down the entire U.S. economy again when looking at the current data. Because you're listening to these scientists have an agenda. Imagine what would happen to our country. Giving the middle finger to every working person in America, telling them to stay home and keep your business closed because of a virus that's less lethal than the flu in people who are under 60 years old with no underlying conditions. 60 and older. That's a key demographic. That if you're 6-year-old, you need to be very concerned about contracting the coronavirus. Especially if you have an underlying condition. We know that. That's a fact. At that 60-year-old base, this is an age where the death rate of infected starts to move up considerably. Then it moves even higher past 65 and much, much, much higher past 70 years old after you get the coronavirus, especially if you have underlying conditions, if you're over 70. Now, where am I going with this? Why am I saying that with 70? Hear me out, guys. It's important. If you are 70 or older, don't you think you will have a much different viewpoint on the coronavirus compared to someone who is 45? And there's leading doctors that are under 50 years old in charge of major hospitals. And I can tell you from speaking close to a dozen or in this age, 0 of them support lockdowns and believe kids should go back to school because they're looking at the data. They don't have an agenda. They're not on TV. But it's just natural. If you are older 70, you should be scared of catching the coronavirus. And again, just talk about the data here that shows the risk of fatality from the coronavirus moves up considerably, surges when you're over 70. Yet, look at the people who are or will be in charge of making decisions for the entire population of Americans about the coronavirus. Let's take Trump, 74 years old. Biden is 77. Dr. Fauci is 79. Pelosi is 80 years old. Schumer is going to be 70 next month. Mitch McConnell, 78. Guys, Democrats and Republicans are named here. Bernie Sanders, 79. We have to worry about listening to him anymore. Think about those people making the decisions. Are these the people we really want to tell the 328 million people living in America on how they should live with the coronavirus? Or how about the 274 million people of those 328 who are under 65 years old? So you talk about these are kids, right? Going to school, the working class, people who own their own businesses, 274 million people who are not in that danger zone. Do we really want these people who are all in a danger zone? Who, again, I would think differently if I'm 75 too. I would be scared shit telling everybody you got to worry. I mean, of course you're going to be biased. This is a small part of the population, of the overall population. I mean, excuse my language. It's fucking insane to be listening to these people who are over 70 telling you that you have to worry about the coronavirus and how scared it is when they're right for their demographic, but for the majority of Americans, they're dead wrong based on the statistics. And it's like putting someone who just survived a plane crash in charge of airline security at a major airport. I mean, everybody would be boarding the plane with parachutes on. It's insane. But seriously, these are people we want, or people that I want to tell me, every parent out there, that our kids under 15 years must stay home from school, even though the fatality rate of these kids infected with coronavirus is 0.04%. 0.04%. If you get it, that's a chance to get 0.04%. Hey, the rate of someone dying from a car crash is 0.9%. Look it up. 0.9%. Not 0.09%, 0.9%. So should every American stop driving cars right now? It wouldn't be a bad thing for AOC. I mean, no more planes, boats, or cars. That's pretty cool. So my subscribers in Hawaii, Alaska, overseas. Guess we'll never meet in person if that Green Deal gets passed. Interesting. But the point of this, and I'm hoping I'm driving this home and I'm not boring you to death, guys. It's going on. Listen, the biggest risk to our economy right now. See, higher interest rates, yeah, that's a no-brainer. But the misinformation about the coronavirus, it's just scaring so many people. And that results in sentiment where people are scared to go out. For example, my friends in New York think I'm crazy for sending my kids back to school since the city remains closed. Again, I just got it now. I got my watch on and get updates that Cuomo is opening up restaurants, indoor dining, 25% after 6 months. But a lot of my friends in New York think I'm crazy. Why? Because de Blasio and Cuomo get on TV twice a day saying the world's going to end if you open your business. And they're being conditioned to be scared. It's not hard to do. It depends on what news stations you're watching and what newspapers you're reading. If you're in New York City, you're nervous. But Florida, Georgia, everything has been open since May, early May. Businesses are doing well. We saw a quick spike in infected rates when we reopened. Again, every media channel let us know that. Look at the spike. They didn't want to talk about the death rates, hospitalization rates stayed low and continue to decline sharply as a percentage each passing week while businesses are open here and things are good. That's great for Florida and Georgia, but that sucks for other cities. Look at L.A., where the mayor said, we're going to turn off your electricity and water for anyone hosting a party or social gathering. So if you have your daughter's 10-year-old birthday party where you invite over 10 people to the party at your house, and you're taking a temperature before they come into your house, no electricity and water, you're cut off. You're completely cut off. We're going to cut off electricity and water. And to be honest, maybe you should have threatened them with something else since you're already shutting off the electricity. That makes sense. But man, I mean, you're better off living in North Korea. You have more freedoms there. All you have to do is, don't say anything bad. Kim, whatever his name is. Don't say anything bad about government and you're fine. You're going to be cool there. Go to North Korea. Again, I've done it against California. I love it. It's a beautiful place. I have lots of friends there. Really cool people. I have no idea what's going on. When I see it, I'm like, whoa, you're going to shut off my electricity and water if I have a couple people over my house? Especially if everyone's under 30? Man, pretty crazy times. But hopefully we're going to stop the bullshit. Stop putting Americans first again and America first. Especially Americans or the people who actually voted these politicians into office, right? You're supposed to give a shit about them. Because we continue spreading this fear, continue to scare the hell out of people, and decide to lock things down again, look out. Look out. Game changer. Our economy will crash. We'll retest lows, not just retest those March lows, we'll blow right through them. And we'll probably do it a day or two after that announcement. I mean, you'll see a massive sell-off. See people leaving all major cities, see more unrest, more riots, more police retiring. I mean, America's going to be a really scary place if we lock down again. And for anyone thinking differently, no matter what side you're on, you're not a realist. You're really not a realist. And people are dying to get out. They're being told you have to stay in your house for something that we're getting the stats that actually is not that bad for the majority of people. for the majority of people living in the United States. We know who we need to protect. But man, America will be a really, really scary place if that happens. So when you say you're looking at the science, it depends whose science you're listening to. And I hope we're listening to the people who don't have an agenda. Because those are the people that are looking at these stats and opening up. And ever since you're looking around every single state that's opened up, look at their economies. They're doing fine. Look at basketball. Look at the live sports. Not seeing tons of people. You're not seeing it spread as fast. Name an athlete that's died from COVID, that's currently playing, that's in good shape. I don't know any, and I follow sports like crazy my whole life. Look at the facts. And use your common sense, because that's what really matters. Now, to talk more about the current election coming up and how it'll impact your portfolio is Daniel Creech, who's a senior analyst at Curzio Research. Going to be a big part of Wall Street Unplugged as we go to our video format and audio. Don't worry. Wall Street Unplugged is still going to be broadcasting audio, uploaded to iTunes on our website, but it's also going to be a Curzio Research YouTube page. And it's cool because we have our studio set up. He's in studio now. It's going to be awesome. Dan's going to share some of his favorite ideas and sectors that he likes, loves giving away names. Really cool conversation. Lots of fun. Then in my educational segment, I'm going to explain why recent downturn, especially in technology, should have made you a lot of money if you followed this key strategy I've been pounding in your heads over the past 6 months. I'm not patting myself on the back here. We'll get things wrong from time to time, but this strategy is essential to every one of your portfolios. And if you're not using it, you continue to get hurt when the markets have these quick and violent pullbacks, which we're going to continue to see. Lots of volatility. So great educational segment coming up. But first, bringing my partner in crime, probably the one person that knows me better than anyone since he works side by side with me every single day, and that's Daniel Creech. Daniel Creech, how's it going, bud?
Hey, wonderful, Frank. Thanks. Great to be back.
So I want to start out by talking about the election, which we all know Biden's leading in the polls. And we all know that Biden or Trump, whoever wins, is going to have significant consequences on everyone's portfolio, at least the way you allocate your portfolio, since there's going to be clear winners and losers. So I want to start off, because I know you have strong opinions about this. I want to start off with a Biden win. What does a U.S. look like if Biden wins and the Democrats take the Senate?
Ooh, well, that that's serious because as it stands right now, if the Republicans keep the Senate and the House keeps Democratic and you get a Biden president, that's one thing. Under your scenario, you'd have a replay of basically the Obama administration. What I mean by that, and hold all the hate mail here real quick, is that what you have to give Democrats credit for is that they band together a lot better than Republicans do on average. So, like, you never hear about never Pelosi's or never Biden's or anything like you do the never Trumpers. So if they win everything, just like with the healthcare bill that Obama had, I believe, did that go through on, was it Christmas Eve or it was in December, and they just ran through healthcare, boom, 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 House, Senate signed. And, that's how quickly a major piece of legislation can take over. And you would see that, well, I don't know where exactly you'd see it first, but you definitely have more takeover and more meddling with healthcare. And then the easiest chopping on the situation on the chopping block would be energy. So you've had both the candidate and vice president and Harris talk about, they were against fracking. They're going to eliminate or phase it out. Now they've kind of walked that back just recently in Pennsylvania. As you see, and as will happen, everybody will kind of cling towards the middle come election, which, 50-ish days now?
It's interesting because, we'll talk about what if Trump wins, but what's dangerous here, and even Trump, I think, did the same thing where he was for offshore drilling and fracking, drilling more, but yet off the west coast of Florida, he just signed into law that you can't drill off the west coast of Florida, and Florida is a big battleground state. So that leads me to this question. I know the Democrats are saying lots of things because there's a key portion of this vote, and it's not just them, it's also the Republicans. There's a key portion of that vote. Remember, the left and the right, guys, you're going to, no matter what facts are present, you're going to believe what you want to believe. You'll never, ever change your mind. I get it. But it's that middle ground that they're trying to persuade. But yet, like you see with Biden, where he'll flip-flop on fracking. All of a sudden, he's like, I never said about fracking. And then you have Trump that just kind of flip-flopped on offshore. My question to you is, are you worried? Because when I hear defund the police, when I hear, just the things that are going on out there where someone could run up to an older person and punch them in the face or shout, and there's almost no consequences. Maybe I punch them in the face, but almost no consequences. Like, these people are eating, and protesters run up to them and shout right in their face and curse. I understand that you don't want to go against this crowd because you need those votes, but are you worried that we could see something pretty crazy, depending on even if it's a Trump win or a Biden win? But yeah, I feel like they're just saying everything right to get the right people. But I'm really worried if they're really supporting things like defund the police, because that's just, again, there's bad apples there and we're dealing with them. But it's very, very scary if we're going to defund the police, and also talking about taking away their guns, people's right to arms and stuff like that. It's a pretty crazy scenario.
Oh, hell yeah. You ought to be scared is the short of it, and that's terrible. But hey, think about that. Put yourself in that situation. Now, this is easy for me because I don't have children, so you can't get me on the emotional side of, well, what would you do and how would you handle this? You're sitting outside. Those videos in, I think it's Rochester, New York. Okay. You're sitting outside. Let's say you have your children, and the protesters come up, start turning over tables, drinking out of your glass, yelling obscenities and all that. How are you going to react? Well, if you got kids, you're probably just getting the hell out of there because you don't want to harm anybody or you don't want to put them in danger. If it's you and a couple guys, you might just say, hey, what the hell are you guys doing? Why you disrupting this business? Why are you disrupting us personally and all that? But yeah, it's going to escalate no matter who wins. And I'll tell you, this is a personal issue here with me, because as part of my job is I have to understand and go through the news. So I go through both sides. Frank is lucky here, a little inside baseball. Frank doesn't have to check CNN and MSNBC and Fox News like I do every single morning. It's depressing. So thank goodness for alcohol and coffee. But you go through these websites every day, and the disheartening thing of what the media is conditioning the people to accept or not accept is this. And Zuckerberg just did it recently. Was it yesterday or the day before? It broke on Axio, or Axios, however you say that. He's basically telling everybody on Facebook, which is, hundreds of millions of people, billions of people worldwide, not to, and you see this throughout different news medias across all boards, but they're conditioning you to not expect, think about this, not expect a election night winner. Now, why else would you do that other than to create divisiveness and more separation in one against the other? There is clear, this is the first time election the post office has been referred to as the center of command or whatever for, electoral votes. That's ridiculous. So the fact that you have different news medias, and then you have Facebook, the CEO of Facebook out there telling people, hey, it could take days, it could take weeks. That is just starting. I mean, that is lighting the biggest box of matches you can imagine. And it's all done on purpose, which is aggravating, but it is what it is. And that's what you have to gear up for.
Okay, now let's switch gears here to a Trump win. Is it status quo? Is everything going to stay the same? Only because I truly thought that everything would be different when he won in terms of uncertainty. It would result in the markets coming down. I thought, if Clinton won, it'd be kind of like the status quo. And I was wrong, and a lot of people were wrong, where things changed considerably. And I thought it would change for the worse having this outsider in. So I'm not quick to say that if Trump wins, hey, everything's going to be okay. I mean, is it going to be maybe a COVID hangover when things are getting better and we have a vaccine and all that nonsense? And the numbers are getting better. We just talked about that. Do you think maybe a COVID hangover 21, 22? Or is it more tax cuts? I mean, what do you see there? And again, we're trying to position the portfolios right. We know everybody has strong opinions on this, but let's talk about the portfolios first. But what happens with the Trump win?
Well, I don't think, and I'm not putting words in your mouth, it's not everything is going to be all clear because as Trump, puts his foot in his mouth like everybody does. But I mean, you talk about the guy having the most fun out of anybody in the world right now is Donald Trump. I mean, he just loves the drama. He loves getting involved and mixing it up, and he does it every day. So that guy is clearly the happiest guy on the earth. But, he says stuff like he's the king of debt. Remember when he was running in 2016? Hey, I'm the king of debt. And he could argue that. Well, what the congressional budget just put out, the deficit is $3 trillion. $3 trillion.
And Munchin's like, it doesn't matter. I don't care. We don't worry about that now.
Now, yeah. But his who's the White House spokesperson? Anyway, she's great. But she was like, well, Trump's the second term is really we're gonna tackle debt hard. Well, hell, you better, because you're racking it up like you can't believe. So a lot of that will be COVID hangover is a good tagline, because um, it could be kind of a rerun of what people anticipated in 2016, meaning the price of goods and infrastructure, or the resources. So like gold sold off hard and was continued its bear market right after its initial spike. Well, now you have the price of gold hanging above 1900 for a while, hit 2000 briefly. With all the extra debt and easing by central bankers, you know, I think it'll be a continuing of what we're seeing right now. And this brings us to the current market pullback, although the market's back up today. You're going to have more discrepancy between the quality and the bigger companies and the well-run companies versus your overall averages. So you can have a situation where a handful of stocks, like the FANGs have recently, can, paint a really nice picture from 10,000 feet. But you dig down. What did you say the other day? The average weighted S&P is like flat to down a few percent.
Yeah, if you take the average, which is not
exactly
equally weighted, right? So,
and basically anybody that has exposure to the markets has exposure to I mean, if you own an ETF, you have basically the FANGs. So as long as people are making money, it really doesn't care. But no, Trump's not out of the woods yet. You're going to have a crazy balancing act between inflation and the haves and have-nots is only going to magnify. Which we can get into some really good businesses and different things like that should withhold. But yeah, it's not going to be easy sailing, that's for sure.
I'm going to ask you a crazy question now. Is it really going to matter who wins in terms of the market? Because there always seems to be an adjustment period. So if we have Biden winning, say we have Trump winning, okay, it's going to be good for energy. Biden probably much better for alternative energy, big tech. There's just different sectors that are going to benefit. We know that Biden's running on increasing corporate taxes, and corporate taxes, to be fair, corporate taxes were higher before Trump came in, and the markets were trading at all-time highs.
Yeah.
I mean, should we be that worried? I think the scenario is either case. If the Democrats come in and win everything, or say the Republicans come in, Trump wins and they have to win the Senate, which is not really on the table right now, but. Just that any of them own all three branches. I mean, so it's for me, and the fact when I heard some politicians talk about getting rid of the filibuster, which is the 2/3 required to vote for a lot of these things to get passed, which is important because you need people from the other side, just so you don't have your total crazy agenda. I mean, if they have that agenda, they could pass anything. The whole Green Deal could pass. The whole entire Green Deal. I mean, that means that, my again, friends in Alaska and Hawaii, I'll never see personally because no cars, no boats, no trains, no nothing. Yeah, it's crazy. It's like, what is it, 30 trillion or something? It's just, again, it's made by a kid that doesn't really understand, but you don't know what could happen. To me, that's the worst case scenario. But I think people looking at this, Daniel, as a Biden win, yet everything else is split. Would it be that bad for stocks? Do we really have to worry?
I don't know that it would be that bad for stocks initially, because like you said, I mean, the stock market did a lot better than Main Street in the Obama administration, I would argue. And you could also argue that exact same thing right now. Main Street isn't doing as well as the stock market is, near all-time highs, especially right after this coronavirus and the shutdowns. And that's a big point because now this is a stat from back in May, but Reuters had it and so did CNBC ran it. And Frank and I were talking about this the other day, which just kind of helps put things in perspective when you think, well, how can this discrepancy between stocks, Wall Street, and Main Street work? And they ran articles when the pandemic hit and the coronavirus lockdowns were in force. Roughly 40% of the people making around $40,000 either lost or were furloughed off their jobs. That's a huge percentage, obviously, 40%. Mm-hmm. Now, I think it was like 19% if you were from 40 to 100K, but those making over 100,000, they lost or replaced jobs or saw a adjustment in hours or whatever of 13%. Now, the emotional argument, just like deaths, not that one death is okay, not that anybody losing their job is good, but when you think about, well, how in the world can this happen when certain companies are doing great and others are not? And that stat is the one that says it. It's, hey, those making the lower income were a lot more affected by employment. Those that still have, discretionary income. And a lot of the people with 100 grand still got stimulus checks, especially if you had children or, the one-offs that.
Even up to 200, I think. It phased out after 150 a little bit.
Exactly. It phased out. But still, you give people that were little affected. And again, 13% is too much. That sucks. But, we're talking big picture here. So they still have income coming in, plus they get this little boost. And that's why, that discrepancy is going to continue and it's going to magnify. The biggest difference in risk I see, because money is emotional, with a Biden landslide or win, is just the psychological and how he sells it. Now, notice today, what did he do? He came out and he said, I'm paraphrasing here because it just broke right before I stepped in here. But basically, I think the Washington Post was reporting, hey, Biden says he's going to slap a 10% tariff or surcharge on companies that move jobs out of the U.S. and then turn around and sell products back to them. Mm-hmm. Well, hell, who does that sound like? That doesn't sound like, you go ask your random guy on the street or a woman, they're probably going to think that's a Trump comment, not a Biden. Mm-hmm. So if he sells it that way, then I think it's fine. But emotionally and psychologically, if you go back to this globalism and everybody, this one world type deal, I think that would be the biggest risk. But that would take some time to unfold.
Now, one of the things I know, which you guys know, I had mentioned to you that I bought my first handgun about 2 months ago. And if you're defunding the police, the things that I'm seeing out there is pretty crazy. It's not too bad in Florida because you're allowed to carry a gun here, where you're not allowed. Never thought in New York ever, right? You're not allowed to unless you have special permits or whatever. But having that gun, I'm hoping that I never have to use it. But I will say this: when I started shooting it at the range, thanks to a subscriber who sells guns that helped me out, we did training and everything, very, very careful. But we went to a range in Florida, started shooting, and I brought Daniel with me. And Daniel started lighting it up. He was hitting bullseye. I'm not kidding. I mentioned it a couple of weeks ago when we first went, where the guy turned around. The guy who works there is like, man, that guy could shoot. And I had no idea. So why don't you give us a little background on that? How'd you learn to shoot? How important that is to you? Because I had no clue until you shoot. And I was like, what? I'm all over the place. I hit a couple bullseyes, but I'm still all over the place, still learning how to shoot. I'm going to hit the person if I shoot him, but I like to hit pretty much in a nice tight circle. But Dan was just grabbing the gun, was just killing it, man. It was awesome.
Well, the funny thing there is, feel sorry for us because this was an amazing day. Like you said, the subscriber was a great guy, real knowledgeable. That was a lot of fun. But after that, we had a golf lesson. So here we walk into this, gun store, and everybody's serious. You walk in and it's not like walking into a coffee shop. They're normal people and it's cool, but it's just hilarious. Everybody's, more serious as they should be and all that. So we walk in looking like a bunch of golfers getting ready to go play golf. And we're like, oh yeah, you got some handguns, you got some ammo. Yeah. Oh, that's cool. Check his target out. Let's act like that, not that we're being silly or goofing around, but we sure as hell don't look like guys that know what they're doing when it comes to handguns. And, but yeah, that's why you don't judge a book by its cover. It was a lot of fun. Long story short, I grew up around guns. My brother is a big hunter, fisherman. When people meet my brother and I, it's hard to tell that we're related at times just because our interest and things are so different. But I've always been around them. I didn't do a ton of shooting growing up, but we did different training courses and fun stuff. And yeah, it's just a blast. So, and then moving to Montana, it's secondary. It's so funny hearing you talk about New York because I just can't imagine not going over to my grandparents and seeing a ton of guns all the time. Be like, oh wow, that wasn't your normal, huh? That must be nice.
It is funny. It's just different cultures, right? I live
absolutely.
in the South. It's extremely religious down here, extremely over the top religious. Usually when you move into a new neighborhood, you'll see your neighbors, bake you some muffins or something. Be like, hey, welcome to over here. Everyone's giving me their church. Hey, you gotta go to my church. Nice to meet you. Say, hey, it's a church I go to. It's just, the different things in the culture and even the Midwest, guns and stuff like that. For me, a lot of that stuff was new. It just surprised the hell out of me, but I'm glad I have you here just in case if I give a bad stock pick to somebody. So
yeah.
At least you'll hit them if they come in and charge me. Joke. That was a joke, everyone. In today's world, they're going to replay that and say, Frank's going to shoot his subscribers. Not going to shoot anybody. Hopefully I really never have to use it, but I like the safety of having it. I do. So let's keep moving on.
Real quick, let's take that a step further. Frank's not the only one, as everybody should in certain opinions. But Smith & Wesson, look at their stock. It's actually pulling back recently. They just spun out American Outdoor Brands. Frank, I can't remember the guest you had on, but he specialized in spinoffs. It's been a while now. But it was a really interesting interview on just the big focus, as investors and think about this. When somebody spins somebody else off, now what do? You get to quit being, either the next two or the stepchild, so to speak. And now you can focus on your own thing. You have your own assets, you have your own cash flow, you can manage your own P&L, profit and loss. That's a big deal. You can kind of step outside the shadow. So, everything is emotional. Keep an eye on Smith & Wesson and even American Outdoor Brands as it performs as a standalone. I think that split recently happened. But Smith & Wesson reported quarterly results a week or so ago. I mean, as you can imagine, gun sales are through the roof year over year. FBI checks are up 30% year over year. And that's a way that everything kind of ties back into capitalism and the markets and what you ought to pay attention to earn wherever you can. So.
Yeah, no, it's definitely true. And it's going to be interesting to see if that trend continues depending on who gets elected. I mean, they're both basically claiming that there's going to be riots and it's going to be crazy depending on who wins. Both sides are saying it's nobody's fault, but it's both of their fault. But whoever it is and whatever you think, whatever side you're on, whatever. But either way, I think the way they're pitching it, if you watch TV, you should buy a gun because whoever wins is going to result in riots everywhere, right? It's crazy. But really, it's when people condition that way, depending on what channel you're watching, it is pretty scary out there. And I want to move on here because you're a person that likes boots on the ground. Your personality is great where Daniel will sit down at a bar and next thing you know, everyone at the whole entire place. Easy to engage, which is a great quality in our business, which I say boots on the ground. You want to talk to everyone and it just gives you a perspective. And that's why so many of you email in frankcurzioresearch.com what things are happening, housing markets, economy. Love that stuff. You're someone who's traveled a few times during COVID. Bars opened up and I'm pretty sure you like bars a little bit, like having a drink. And again, I'm jealous by saying that because the single days are a lot more fun. But talk about
not during COVID.
Yeah, not during COVID. But talk about what you're hearing out there, what you're seeing out there. Have you learned anything? Because again, you do talk to a lot of business owners, a lot of people, and you have an amazing network.
Yeah, what's interesting is that before lockdowns happen, and when I was in Arizona still, when everything initially shut down, and I just couldn't believe. It was crazy like a movie. I mean, you jump on the 101 or the 202 in Arizona, which are busy, highways and connectors, and there's nobody out there. I mean, it's just eerie. You see still shots of New York City or whatever, and it's just crazy to think that, look at this, it's dead. So the biggest thing around like the cigar bar I go to and different bars I frequent to do boots on the ground research. It's amazing to hear everybody excited about seeing crowds again and not being able to go to every restaurant and not have every table empty. So from a psychological standpoint, it's kind of nice. Labor Day, the beach. Did you try to go to the beach? You went up near the park, right? The skate park?
The skate park. Oh, it was jammed.
Yeah. I was going to ask you, there's no way you found a parking spot.
It was jammed.
It was unbelievable.
Yep.
And the beaches are crowded. And again, I'm not saying be reckless and, I'm not getting all that. It was just good to see people out and about and back to a little bit of normality there. The other thing is that's sticking out to me is that people are going to stick to quality. So the boots on your ground research in the bars, a lot of the bartenders that wear makeup go to Ulta, and they love Ulta brands. And I believe the CEO, Mary, is on Kramer's show tonight, so they might get a little pop on that. But it's the whole do-it-yourself thing. So two drastically different ones. There's a AutoZone that just opened up here on the island. And if you're anything like me and you're not a hands-on Mr. Fix-It type of guy, AutoZone is one of the best companies and places you can go to when you need help. I've been into AutoZones through Texas when I had trouble traveling, Florida, Arizona. I mean, they are the nicest guys all over, and their stock price reflects it. That's a well-run company. But I go in there, I ask them how business is doing. Even though I have a newer truck now, so I shouldn't have to worry about, breaking down or anything. But you go in there, you ask them how things are going, and just what are people doing? People aren't traveling very much. I know a bunch of guys that frequent flyer, and they're still not. So it's limited, but I think quality is going to stick out, and it's good to see some things opening and people excited to see crowds again.
Let's get a new truck. Must get paid pretty good, right? I think the boss is pretty cool.
Well, I took on the U.S. debt plan.
Oh, that's great stuff. Okay, so let's get more in detail. You gave us some names there, but we just saw a 10% pullback in the market. We're bouncing back a little bit today. if you would have looked at the markets or watched financial news channels last 3 days, it looks like it's the end of the world correction. They throw around the word correction like crazy. You got to be careful. But we're seeing a bounce back. We still have a lot of conditions in the market that remain low interest rates. We have a fiscal policy where we're going to see trillions more coming into this market as that separation between Main Street and Wall Street widen. There's just a lot of positives out there, especially with the data on COVID getting better, and you're looking at those statistics get better and better, and you're seeing more things open up, right? I mean, that's a fact. So what do you like here on this pullback? Again, we always love pullbacks if you're prepared, right? It allows you to buy stuff cheaper. What are you looking at? Maybe picking up some of these technology names that pull back, maybe other things. What has your interest in the market?
Yeah, I'll give you a couple high flyers, then I'll give you some boring businesses as well. So the high flyer, which is a nemesis of ours, is Overstock. So long story short, we got burnt on Overstock. They had a great plan at the time. This is all pre-COVID, to eliminate the retail business, the e-commerce business, to compete with the likes of Amazon, which they weren't making money, not doing well at, and focus on their blockchain Medici holding company. And so essentially, if the plan would have went through, they would have gotten a bunch of money to sell off the retail business. And then you just have a show me moment, like, okay, we got a good management team, we got a good product, we got a bunch of cash. Now we're just going to execute and make this thing work. Well, as luck would have it, better to be lucky than good, because what happened, Frank? They didn't land a deal. They didn't sell the e-commerce, and then everybody got locked down. Mm-hmm. So Overstock sold off with the rest of the market in March, went down to sub 5, and then it went to basically 120. So on a momentum thing, then you also have the Bitcoin play there. So forget that T0 is not Bitcoin or anything related to it. It does use blockchain. I get to that. But if you look at Overstock's price action in the stock, OSTK, it kind of fluctuates along with Bitcoin. So Bitcoin hit 12,000, pulled back sharply to 9,000 and change. I don't think that's a coincidence. So if you got some momentum and you're okay, you can look at something crazy like Overstock. Yeti is another momentum play I like, YETI, the affordable handheld coolers.
Is that what they call them, the affordable?
No, I'm having fun with it just because I can't believe how many they sell. Those things are outrageous. They're great quality. Yeah, I mean,
people will pay up for quality.
Do you have any Yetis? Do you have a Yeti?
I think my wife does, but they pay up for quality. They do. They love.
It's amazing. I've watched that stock just keep going up. Interesting red flag. Insiders are selling. Now they still have a ton of stock on as insiders. You can't take them. You can't blame them for taking some cash off the table, but that is something. But Yeti and Overstock are obviously momentum names. Real quick on the boring side, when I was on a couple of months ago, I talked about the insurance sector, the property casualty specifically. So I'm talking of Travelers, Chubb, W.R. Berkley, Cincinnati Financial.
Progressive is the one. Which one?
Progressive, yeah, the auto insurance.
And
is
that's
the
up
one
nice. And you mentioned.
Yeah, I think it's up 14, 15% in the last couple of months. Again, that's an easy one with, it didn't sell off with the overall market, but it went right back to at the time highs. I think it's cracked through the 90 a share, which is good. But the interesting thing, I've been doing a lot of reading on this, and what I mentioned a couple months ago was business interruption is a big deal right now because you have, I call it 1,000 lawsuits across the country. So if you're a business and you got shut down, you look through your policy, you need all the help you can get. You go and say, hey, I want this business interruption. My business was interrupted. I've been shut down for 2 months. Well, the insurance company comes back and says, yeah, but you got to have physical damage. So we're not on the hook for this. And I know I'm going to take a lot of flack for this. I am biased towards insurance companies. But if you're in a situation where the government forces you to shut down, and that's what happened, they forced you to shut down. I'm not a big government guy, but how do you put somebody else on the hook for that? So if you're the government and you say, hey, Frank Curzio is shut down, Frank Curzio Capital, you're shut down, can't work. So Daniel's insurance company is on the hook for that business interruption. Now, of course, insurance companies are going to fight this like crazy, and it's very difficult to win in lawsuits against those guys because, they have a whole team of lawyers. But out of Missouri last month, it broke where a judge allowed a case to proceed, and they could claim the coronavirus was a physically attached and therefore is causing physical damage. I think that's a big stretch. So any sell-off on the insurance companies related to that kind of headline risk, I think is a buying opportunity because, A, you can't price risk that you can't measure like a virus. And if you change contract law and all of a sudden put insurance companies on the hook for this, you're going to change, the ramifications of that on every contract going forward would bring everything to a standstill. So the odds of that happening are fringe and barely none.
So what's your favorite name right now in the space?
My favorite, I like Cincinnati Financial and Chubb right off the top. Access Capital, AXS, has had a lot. Some director is buying stock hand over fist in that company.
Mm-hmm.
I mean, now granted, you always got to take that with a grain of salt because, like you point out, I mean, if you're worth $10 million and you put 7 of it into a stock, that's a big deal. If you're worth 10 billion and you put 100 million, that's a little different. So the director's got to have a lot of money. But that being said, he has made some serious purchases of that AXS lately. And I mean, you got to give that guy credit. So I would look into that. Real quick, the reason I like Chubb and Cincinnati Financial is because on their you read through these transcripts on their earnings call, and it's just a straightforward management team. They're all about risk and reward, and they try to be there for people. I know it's big bad insurance gets lumped in with big oil and all that kind of stuff at times, but they're just really well run companies that when you get sell-offs like this, I think you want to hold for the long term, even though long term isn't sexy right now.
All right, cool. Lots of new ideas there. And I want to tell you guys something. So we're doing this interview, and Daniel's actually sitting across from me, and we have our studio. It's the first time I've done face-to-face interview, which we plan to do if people are going to come here, and I'll pay for their costs. We're going to have some high-profile guests coming on, and a lot of people who have books love to get that attention. And since you guys like telling everybody about my podcast, that audience is getting bigger and bigger that I want to thank you for. So I want to get some really great quality guests out there. And yeah, doing these face-to-face interviews, but having this studio, we're going to have Daniel on going forward, and we're going to be videotaping it and putting segments of this on YouTube. This way you could see it. And also we'll have pictures up and things like that. So the studio's ready to go, just getting a couple of backdrops, but it's really cool. Daniel's on his own microphone. He's got his own station now. So, we're going to be talking about stocks and the news. So I definitely want to hear from you, Frank at CurzioResearch.com. And as for Daniel, remember, I mean, you're going to have to agree with everything I say. You know that, right?
Yeah. It's, yeah, I'm on a short-term contract now. I don't know what that means, but that's okay.
Yeah. It's so funny too, because Daniel and I actually have strong opinions about things, and we have the back and forths, but we do it like you're supposed to do it instead of like, I hate you and you hate me. Like we see right now with Democrats and Republicans, it's kind of, but for me, and just to let you know, Daniel, I mean, I think any boss would agree, anyone who has their own company, you could always hire anyone to kiss your ass. It's not difficult. I want you to give me your honest opinions. I want you to lay it out there, and we're going to have disagreements, but I've seen podcasts. Oh man. I know you have too, Daniel, where you have like a person who I consider like, it's a sidekick, and whatever that person says, I mean, they can have a green shirt on and say it's black. Yup, that black shirt is the nicest shirt I ever seen. And I'm like, oh, it's so terrible. Like that's not, you don't see that with the ESPN podcasts a lot or some, but there are in our industry that do it. And if they have 2 people doing it, it's kind of crazy where it's just like that one person agrees everything. You're not going to get that here where we have a wide range of opinions, so many different things. It's going to be a lot of fun, but I just want to let you guys know that studio's up and running, lights here. We're going to be doing videos. It's going to be really, really cool. And just any ideas that you guys, suggestions, guests, keep them coming in at frankcurzioresearch.com. And Daniel, thank you so much for coming on, man. You're going to be on going forward a lot more. It's going to be fun. People are going to see your face, so get ready, man. Get ready for the negative emails. You're going to have to give you email. Oh, I love it. I can't wait to get those.
I know. He's passed on. Send a few negative ones because Frank's forwarded a couple of positive ones, and I know he's hiding the truth, so we can take it. Let's see how this goes.
Yeah, I told him. The more hate mail, that means that you're making progress. That's a good thing. All right, Dan. Thanks so much for coming on, man. I'll talk to you soon. All right, great stuff from Creech. The perfect voice for radio. Face, I'm not so sure. Man, we're going to be making fun of each other all the time. But Creech actually looks great. He lost a lot of weight. We did good here. We both encourage each other and eat good, eat well, and working out a lot. So it's really awesome. It's nice having him in the office. And my team coming down in 2 weeks. I'm used to seeing them every month and a half. I haven't seen them in a long time due to COVID. So it's going to be really cool to get the team in-house and have fun. But yeah, Creech, we have the studio set up, but let me know what you thought. Hey, that's what we're going to be talking about. A lot of different market things. We might even do a podcast even more than once a week for Wall Street Unplugged. If you're a subscriber, I do a special podcast just for my subscribers only. It's not on iTunes. That's the Frankly Speaking. I removed it off the free site because I got people who are never paid for my service asking me 5,000 questions. Like I was a personal portfolio manager, and that wasn't going to happen. I want to give more attention to the people that, are part of our brand, part of our family. And they love it. So I'm taking their questions every Friday. I send them a link out. But Wall Street Unplugged, we'll try to do that a little bit more. There's a lot to talk about. And it's really cool with this format, having someone in the office. A lot different than just, interviewing someone across the country, just using Skype. But this is really cool. Face-to-face. A lot of fun. Let me know what you thought, though. FrankCurzioResearch.com. And again, be honest. Everything that we do here is a lot of our best ideas have come from you because you've been critical sometimes of some of the things that we do or things that we want to change. And we look at that. I mean, our customer service, to me, customer service is always one of the biggest and most important departments because, one, if anything goes wrong, people are going to let you know right there, right then. But you could see what people don't like and what people like. And that's how, you build a company, you build a brand by can't do what everybody wants, but the majority, we started newsletters based on your advice and everything. So I definitely want to hear you. FrankCurzioResearch.com. Looking forward to doing this with Creech and this format, which is going to be really, really cool. Now let's get to my educational segment. So we had the markets crashed, right? Fell 10%, notably tech stocks, which fell 10% in 3 days. And we'll see a little bit of rebound. But I know many of you own some of these stocks. And they're down. I just mentioned at the beginning of this podcast, in the opening, a lot of it down 30% plus from their highs. Now, over the past 18 months, I've been telling you to use a strategy that helps you hedge your portfolio to where your losses in your portfolio will be minimized if the stock market falls like it did, and to where these hedges could actually result in you making an absolute fortune. And what strategy am I talking about? Buying puts. Specifically long-dated puts. It's not difficult to do. Don't get scared of an option strategy and say, I'm never going to try. It's very, very simple. So buying puts is an option strategy. It gives you the right to sell a stock at a certain price at a certain time. So basically selling it first and buying it back later. It's a way to almost short stocks. But you're betting against stocks where your risk is limited to the amount you put into that trade. That's unlike shorting a stock where your risk is unlimited. A stock like Tesla, Zoom, Overstock can pop hundreds of % in months, probably resulting in your wife kicking you out of the house, that house that she now has to sell, and you maybe buy a refrigerator box to live in because you're completely broke. It's how dangerous it is. Now, when you're looking at puts, we want to talk about long-dated puts, which go out for 12 months. And the longer the time frame, the more expensive they are. It's options. But I explain how you should be using this strategy to hedge your portfolio. What does that mean? Well, most of you, mom-and-pop investors, common investors, individual investors, are long stocks. Most of them are long stocks. Long stocks only. So say if you keep 90% of your portfolio long. Say if you have a Curzio Research Advisory newsletter, and you buy all the positions, and I'm going to use this number. Some of you have 1,000, some of you have 10,000. Let's say if it's a $100,000 portfolio, you have 90,000 in these positions that you long. Just say that's the only thing you own. You don't own a 401k. You get $100,000. Just say it. Make numbers easy. Now you take 10% of it and you buy long dated puts on sectors and S&P 500, even individual stocks, where a 25% decline, which we saw in a lot of companies in a 3-day span, could result in 10x profits in months on these positions. Right? You look at a 3-day crash here, 3-day pullback, and it's a crash. It's the can't say a NASDAQ crash. It's corrected, but these stocks have crashed. A lot of them down 25% plus, 30% plus. A lot of names. So what happens when you see a decline like that? Well, your long portfolio is going to get hit, right? It's going to be down since the markets are pulling back, but you're going to start generating lots of money from your put positions, which if you hit a good one, like just where the stock falls 50 to 60%, that one position could be worth the entire 90% of your long portfolio. That's called hedging. Now, say if you started buying puts in April, what happened? Remember, these are 1-year puts. The market surged, right? The March, April, just kept going higher and higher and higher. And most of these out of the money for now. And let's say you lose all of your money on every one of these positions, right? Every one of these positions. So 10% of your portfolio you lose. So, wow, Frank, that's a lot. That's every single position. Say if you bought 7 or 8 different positions, right? Different stock sectors that you think are going to go down. And you lost your money in all of them. Well, since April, the market, right, the S&P 500 surged over 50%. That includes this week's sell-off. So chances are your long portfolio is up huge, easily, making up the difference and then some. Again, this is how you hedge your portfolio. And with the strategy, with buying puts, you only lose the amount of money you put into the trade, so your risk is limited. And of course, it's not likely you're going to lose 100% of your money in every put you buy, but I wanted to throw in the worst case scenario to help you understand the power of hedging. And it's not some bullshit strategy that I would never use a Curzio research to help our subscribers. In fact, I created Money Flow Trader, a newsletter, whose main focus is buying puts. And this product is run by Ginny Terranova, amazing analyst. It's so much positive. Send me something negative about Ginny already. But just a hard worker. I mean, someone that even when she admits her mistakes, tells you what to do, just, really proud. It's really, really cool watching her. She's just an amazing analyst. But she also has long trades in that portfolio as well, which is a good thing considering the market surged since April. So she bought some call options on gold and silver and made some nice gains, while a lot of her other positions were down because the market kept going higher and higher. But this product I created for you is because I care about my subscribers, because I care about my investors, because the markets don't always go up and up and up. Over long term, you could say they do. But sometimes you get names that get destroyed. And the professionals, the experts, this is how they invest. They don't put everything long and say, go, 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 go. Some of them do. But this is a product, this is something that will help you become a better investor. I'm not selling a product here. Learn about buying puts. Strategy, again, most pros use. And the best part of all, it's easy. It's very, very easy to do. Don't get intimidated. Oh, it's options. Buy puts. How do you do? You could do your E-Trade, Fidelity account, and Money Flow Trader with Ginny. She tells you exactly how to place to trade, leaving almost no work for her subscribers. Just do the trade, put it in your E-Trade, you're good. She explains everything on how to do it. But get familiar with this strategy, because we're in a market that when it comes down, I mean, it comes down in days. And you have everyone out there nervous, selling. And you're going to go to parties. Everyone's going to talk about how much money they lost when you could be making a killing simply because you were smart. You hedged your portfolio. Because in this market, it's a perfect strategy. Since the credit crisis, you can last 10 years. Our pullbacks are quick and violent. Write a chart on this. Again, I'm not telling you that you want to go to my free sites, Twitter at Frank Curzio or Curzio Research YouTube page. And I put up a video, put a chart up there showing you the declines, those 10% declines. They all happen within 45 days. There's like 7 or 8 of them, I think, over the past 10 years. It's going to continue to happen. It's going to happen often. But you have those violent, quick pullbacks. It's not like a long, drawn out, the recession from 2000 to 2003. In the middle of there was an actual recession. But, that period was terrible. The credit crisis took about 18 months for the market to finally hit its lows from its 2007 peak. So it was March 19 lows. But, it's different now. It's a different market with algorithm. People run to the exits immediately, scare the shit out of you. You have 10, 12, 50% pullbacks happen violently. You're going to happen often. That's why this strategy works. Remember, you have a year. You have a year. And if you're wrong on every one of those positions, chances are your long portfolio is going to go higher. But say if you're right on a couple, and you're really right on 1 or 2 of these things that Ginny has recommended in Money Flow Trader, man, and you will make an absolute killing. And it's not often you're seeing people out there, newsletters, whatever, logging in 500% gains, 200% gains, 175% gains. And these are some of the gains we've seen over the last 6 months. Huge, huge, huge gains. And you're risking and you're losing, some of the other ones that you're putting your money into when the market goes higher. But again, the rest of your portfolio should be doing fine. And when you use this as a hedging strategy, you don't just want to purchase Money Flow Trader and say, okay, this is the only thing I'm doing. No, it's a hedge against everything else you own. And you could win both ways. If the market stays flat and you're betting against a certain sector of stock and this thing goes down tremendously, now your long portfolio is going to be okay and you're going to make a lot of money. So when it's risk reward, when you look at risk reward, this is such a fantastic strategy that I'm hoping most of you are going to look at. And Money Flow Trader subscribers are getting so much good positive feedback. If you're interested in learning more about that product, go to our website, thecurzioresearch.com. Again, you don't have to buy it. It is an expensive product, one of our high-end products. But almost everyone that has subscribed since Ginny has been there has stayed on board, is probably loving the product right now because she also had some big winners on the long side with gold and silver. And now you're seeing a market that's really, really crazy, and it's going to remain crazy. We're going to see these violent pullbacks, lots of liquidity in the market. It's just a perfect product to hedge your portfolio and let you sleep at night. So again, Money Flow Trader, interested, go to our CurzioResearch.com website. Okay, guys, that's it for me. A little bit longer podcast than expected because that interview with Daniel was really cool. It's nice having someone in the office. Just flows. Really, really awesome. Again, I want to hear from you. Any ideas, FrankCurzioResearch.com. Thank you so much for listening. Really appreciate all the support over the years, over the decades. And as always, I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.